Most people are taught to think about money in a very linear way. Work more hours, earn a higher salary, and slowly increase financial security over time. But many wealthy people approach income completely differently. Instead of relying mainly on a paycheck, they focus on building systems that generate money through assets, ownership, investments, businesses, leverage, and cash flow streams that continue working even when they are not actively trading time for income. Today we will talk about rich people don't earn income. They engineer it. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most people are trained to think about money one way from an early age. Most people are taught a simple financial formula. Go to school, get a stable job, work hard, earn a paycheck, and slowly build security over time. This creates a mindset where income is directly connected to labor. You work a certain number of hours, and in return you receive money. For millions of people, this becomes the only model of earning they ever truly understand. But wealthy individuals often approach money very differently. Instead of focusing only on earning income through labor, they focus on designing systems, structures, and assets that generate income continuously. In other words, they do not just earn money, they engineer how money flows toward them. 9. The wealthy separate income from time. One of the biggest differences between ordinary income and engineered income is scalability. Traditional jobs usually have fixed limits because income depends heavily on hours worked. There are only so many hours available in a day, which naturally limits earning potential. Wealthy individuals often build systems where income is not directly tied to personal time. Businesses, investments, royalties, intellectual property, real estate, and scalable digital systems can continue generating money regardless of how many hours the owner personally works each day. 8. Ownership creates financial leverage. The wealthy focus heavily on ownership because ownership creates leverage. When someone owns shares in businesses, real estate, investment funds, or productive assets, they benefit from the economic activity those assets generate. Employees earn wages for labor, but owners benefit from the output of entire systems. This difference becomes enormous over time because assets can scale far beyond individual human effort. 7. Multiple income streams create stability and growth. Most workers rely heavily on one primary source of income: their job. This creates vulnerability because financial stability depends on continuous employment. Wealthy individuals often structure finances differently by building multiple income streams. Dividends, rental income, business profits, licensing, investments, royalties, and cash-flowing assets all create layers of income operating simultaneously. This not only increases financial growth potential, but also reduces dependence on any single source of earnings. 6. Taxes often favor structured wealth over salaries. Another reason engineered income becomes so powerful is because tax systems frequently treat different forms of income differently. Traditional wages are often taxed directly and consistently, while investment income, capital gains, depreciation, and business structures may receive different treatment depending on local laws. Wealthy individuals frequently spend significant time structuring how income flows legally and efficiently through businesses, trusts, investments, and asset ownership. This allows more money to remain available for reinvestment and compounding over time. 5. Debt can be used as a wealth tool. Most ordinary households experience debt as financial pressure. Credit cards, car loans, student loans, or mortgages consuming future income. Wealthy individuals often use debt differently. Instead of borrowing mainly for consumption, they may borrow strategically to acquire assets capable of generating returns greater than borrowing costs. This creates leverage. Productive debt can help expand businesses, purchase appreciating assets, or increase investment exposure. The difference is not debt itself, but whether borrowed money finances consumption or cash-flowing assets. 4. Compound growth is built into engineered income. Engineered income systems often benefit from compounding. Businesses reinvest profits to grow larger. Investments generate returns that create additional returns. Rental income may increase while properties appreciate simultaneously. Over time, these systems can accelerate wealth growth exponentially because gains continuously build upon previous gains. Ordinary labor income usually grows much more slowly because it remains constrained by human time and fixed salary structures. 3. The wealthy design systems before they need them. Another major difference is long-term planning. Many financially successful individuals spend years building structures that may not produce large results immediately, but create enormous future advantages later. Businesses, investment portfolios, ownership stakes, and scalable assets often require patience early on. The wealthy frequently think in decades rather than weeks or months. They engineer systems designed to continue producing value long into the future, instead of focusing only on immediate income. 2. Financial education changes how money is viewed. Most people are educated mainly to become workers and consumers, not owners and system builders. Schools rarely teach cash flow structures, investing psychology, tax efficiency, business leverage, or capital allocation deeply. As a result, many individuals focus only on earning and spending income without understanding how wealth itself is engineered strategically. Financial education changes this perspective entirely because it teaches people to think about how money flows, scales, compounds, and multiplies through systems rather than only through labor. 1. The real secret of wealth. The rich build systems that produce income automatically over time. The deeper truth about engineered income is not that wealthy people never work. It is that they work differently. Because the truth is simple, ordinary income depends heavily on active labor, while engineered income depends on ownership, leverage, systems, and assets capable of producing cash flow independently over time. And once you understand that the wealthy focus less on trading hours for dollars and more on designing structures where businesses, investments, assets, and financial systems continuously generate money in the background, you begin seeing why some people stay trapped working endlessly, while others quietly build wealth that grows even when they are not actively working at all. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.